Hey everybody, what's up? It's Booksy. Today is December 2nd, 2025. Rolling into the new year, weather's starting to get cold. Thanksgiving's done. Moving into the holiday season at the end of the year. And I would like to do a somewhat short form video today. You all know I'm not very good at that. But before I do that, just a quick PSA, quick cleaning house notification. I will be taking down and removing most of my content again. Last year I did this and most people didn't notice because what I was doing was I was removing videos that were like over a year old, basically. Um, and at this point, going back to like 2024, I mean, I had some videos that are still very relevant. I had done a pretty huge macro wave video back in January 2024, which is still quite relevant. I mean, it did pan out that way. It ended up being a really long form. That's where I first kind of started looking at February 2026 as kind of the end of a massive wave. And ever since then, everything's been more minutia. But even that, I'm probably gonna just scrub it clean. And the main reason for that is that I view TA as cumulative. I've heard people say things like when it takes a long time for something to happen, they'll say, "Well, people have been saying this is going to happen forever. It's never going to happen." Well, listen, there are certainly things that I think when folks say it, especially on YouTube, you have to take it with a grain of salt. If even that, you could just say, "Well, I don't think that's very reasonable," or it's not just going to come out of nowhere, that kind of a thing. I think when you have a lot of time and patience and you build up a cumulative thesis, you're really not hurt by time. And I think that the more time goes on, the more information you have. So I don't actually see it as a bad thing. I know that some folks will look at it as, oh, well, it didn't happen here or it didn't happen there. Sure. Um, that's fine. I mean, you can look at that glass half empty, but the truth is that you're really just still getting more information. We don't have the cards, right? We don't know. Timing is probably one of the most difficult things in the market, and outside of doing maybe what you would call wave theory, um, there's really not much you can time in the market outside of just kind of having inside knowledge. So um, as long as you're comfortable with that understanding, I think we're in good shape here. I've been mentioning it for a long time that and a long, long time now. And I'm not going to go back and pick out a clip of every single time I said it, but I've probably said it hundreds of times over the past 2 years now that I really didn't see a very strong conclusion to all of this until, almost a 2 year cycle. And I had been talking about 2 years from August 2023, but even still, like a lot of the dates that were showing on like the bigger picture were like February, March 2026. Because I think there's a lot of good reason for that. Um, what you're seeing on the chart right now is AMC, right on the whole. And I made an argument several times, and I've talked about this setup right here is the main setup for AMC. It's present in pretty much every single bottom structure that you have on AMC. It builds out much like, and this is important for what I'm about to talk about. I'll be brief about it. I go through this almost every video, it feels like. Especially when I was streaming, I would do it a lot. This structure right here is kind of like the bread and butter of a wave formation. And it ultimately could be mapped onto like a Wyckofian setup. Depends on what happens, obviously, here after like an auto reaction. Maybe it's bearish, maybe it's bullish. But this is essentially like the bread and butter of almost every trade. Once you get that auto reaction and maybe a phase B top, you usually will see a redistribution, right? And this can often look like that famous kind of a cat ear distribution because it's forming like micro wave patterns, right? So this is also one way to think about it is like you've got inside of this, you have different waves as well. You have different tests of liquidity. It's not really that complicated if you think about it as just going up and down in a range and testing liquidity high, testing liquidity low. And what happens is that if it's a suitable bottom and it's not distributive, and that's a big if. I mean, you don't know for sure until you see kind of the way it builds out and how the liquidity is moving. This typically will break back to the upside and go into what we call an SOS. And what I did a long time ago, and if it's weak, sometimes this will be a UTAD, right? This could be a weakness and then be an upthrust after distribution. It depends, again, on the setup. We've seen it different ways in different times. But what I've said in the past is that if you look at it this way, then it's a very simple formula, right? It is a really simple way of looking at stocks moving in the market. And I've found that this is highly, highly, highly accurate in terms of judging a bottom or a reaction, because when it breaks down, it always kind of does the same, like two things, right? And when it breaks out, it always does one of like two things. It's not really that complicated. And honestly, I think that when you look at smart money trading and the way it's built, it's essentially built around the same principles. And I think that's why Wyckoff works, as well as it does and builds out these functions quite neatly. I think there's a simple enough motion here to track. But one of the things that I've mentioned in the past was that I see this on AMC, and I was looking at this guy right here. And ultimately, what I've found by just observation and just countless pattern recognition and just doing it over and over and over again, and I do this for bearish and for bullish. So lest you think I'm like some kind of a perma bull or something, that's not true. This pattern appears here in these, specifically in this region. They were all over the place, but they were bearish, and they continually had those UTADs at the end, which usually ended up being here, right? You end up with like a breakdown, and you find that, just like it did here, you find that this was weakness. Usually it's more obvious because there's an early sign of weakness, like here, for example. There'd be like an early sign of weakness, and then it would go low, as opposed to being a little bit stronger where it kind of shows some strength and then doesn't go low till the end, which is usually more of a sign of strength for the bulls. But what I've said in the past, like this is typically where you would see that. You'd see that weakness early on. You'd see maybe push too high for distribution, and then there'd be another weakness, and then maybe a UTAD here, an upthrust after distribution, just kind of a final hoorah. And this is where you get the classic bigger cat ear, and you can see it, right? Wave up, down, up, but then it rejects when it comes to the cross. Again, maybe this seems complex, but it's actually quite simple, because when it's bullish, this won't happen. It won't happen in this way. You will at times get an SOS with a backup where it needs to back up to like a creek or something. You might get a push high into an SOS and then it backs up to a creek, but you'll never go back below that creek again. And that only happens if it's bearish. It just doesn't happen almost I can't even imagine an example where that's happened, unless I just misread the early part of the range and we're not where I thought we were or something. This just doesn't happen. And almost always, once this kind of hits this layer, it usually ends up going really fast down. Like this is where you have like the big breakdown. So why talk about all this, in the midst of everything that's going on? And why talk about this in terms of like the big picture? The overall thesis was like one of, hey, this is an iterative function that matches previous iterative functions, right, that we've seen before. And that's what I think this is. And I mean, you can kind of glance at it and tell. I don't think you need me to tell you that looks very much the same. But it does help to kind of just see it visually, as the same kind of function. So when we look at these things, I've been looking at this pattern. I see it as, all right, if it's a wave that breaks back up, you may have a spring. And that's what I think ultimately what we're experiencing now. Some people may think it's a breakdown. That's opinion, based on something. Like I don't really know where that comes from, because personally, like I don't see it. I see an auto reaction here that's pretty huge. And sure, that could be distributive, but it never went low. It reacted back up to the middle, Oh, on balance looks absolutely fantastic. I've been talking about on balance volume for quite some time now, and let me get the other on balance chart up. Hold on. And I think it just looks fantastic. I can't find any real problems with it. To me, it's like, yeah, it's going out of the bottom, but that's fine. I mean, it went out of the top in the beginning, and it wasn't really bound by this structure. So this makes perfect sense to me. This was like kind of a massive check to the upside. We should have some kind of a check to the downside. And then when you look back at what happened in 2021, again, like I'm not saying things have to be one to one. They do not. They can be kind of a rhythm to it. But there's certainly like an element of consistency here. You see that this comes back to the original spot where this kind of originally kind of has the most upside, and that was back in November of 2023. We were just passing through November of 2025, right? So even if you think about it in those terms, this is basically flat while the stock price has been coming down, And this sort of represents, in my mind, probably like the bigger picture here, which is that, yeah, there's an element of sell off clearly, but when you look at on balance, that's very nice. And on the whole, this is not broken down completely. But that being said, in 2021, that it does come very, very low. But this is kind of the big picture, right? Is like if you look back and you see it, some of these early reactions, it was very low, in February when it first kind of came low into the range. This was right before a COVID drop. And this is the place that eventually, as you can tell, acts as a sort of ceiling. And we do eventually come back to it and even finding support above it, in the future. This particular floor is very important, right? Long standing. But it's interesting how like the on balance volume just continually rises and stays very elevated until the last possible second. There's this massive drop. Weirdly, if you go and read about on balance volume, it shouldn't act like this. There shouldn't be like some kind of level of support in on balance volume. Yeah, you kind of interpret those things. You kind of read between the lines because ultimately you're trying to use it as an indicator for maybe divergences or hidden divergences, whether bearish or bullish. And also it's supposed to indicate to some degree maybe what institutional money is doing. But it's actually more about the direction, not about where it is specifically on the numbers. The numbers are like a cumulative buildup, right? So yeah, like normally you would look at this and not really think too hard about, oh, it's hitting this level right here, right? Which goes backwards. That's not really the best way to think about it, but it is an interesting idea because this is obviously very divergent by comparison to the price action. And then at the end, when it does hit a spring, it's like the on balance has a reset, right? And you can see that the reset comes back to roost. It basically comes back to where it was in the very beginning. And just like what I was talking about a second ago, I mean, you can see this. This is all downward, and this is flat. So I had on my chart, and I could go back and dig them out, I guess, that I thought it would come down pretty low earlier, and it took a lot longer, and it's just taken forever. Does that mean it can't go lower? Well, no. I think you can kind of take this and go with it and go backwards and say, I think it's not low enough. I think it's got to come down to here. I think they need to have like a final big sell down or this or this or this. Yeah, I mean, it's whatever. I don't personally find it to be necessary, but I think that this to me is like the bigger one. You've built support. You're testing it right now. This was a top at one point, just like it was in 2021. And again, we're just checking it. Maybe there's a dive low that needs to happen still. Maybe this is a final hook and it's going to drop again. I can't say that's not going to happen. I think it's possible. But big picture wise, on balance looks fantastic. Like I could not have made this better. I feel like this is really, really clean. It's walked across the entire channel again. This is like a classic pitchfork setup. And I think that, yeah, if it breaks down and then rejects, you've got a problem. But I don't see that happening just yet. Anyways, so the big picture here is like, this is an iterative function, okay? So iteration means that it's built into, like a fractal has iterations. It means that it's built into the parts. So while this looks like a double bottom, right? If you were to simplify it, you would say it's just a double bottom, Booksy, a W shape, right? Sure. At the bottom of a wave. If you look at a Wyckoff schematic, a lot of them look like a W, all right? Not very complicated, pretty straightforward. They create a bottom, then they jump the creek, and then they leave, right? They test high, they test low. This is also evident, right, in this little guy right here. So just like this is a bigger wave that may actually be part of another family, right, because this can go up. And this is where you get into interesting comparisons between Elliott wave, for example, and Wyckoff, because Elliott wave uses iterative function as part of its model. This particular setup could be a bottom to a previous top. And all the same, when you get into the nitty gritty of the small, you're really talking about the same things. Like I've marked it off already. This is a bottom here, W shape, top W shape. Wyckoff isn't really designed to work on the short term. It's not made for like short-term trade because it's meant to track institutional trading, which is really long-term. But we do see that as a pattern in the market. Often that's the case. So in looking at this, I've been most focused on, I'm going to try to clean this up a bit. And one of the things that came up was the comparison of the 226%. Now, this is a number that seems a little random, but it came from a mathematical reversal of these different things. Like, so we had the split, which was kind of two splits because you had ape combination, and then you also had a reverse split with that. So ape came back into AMC, right, if you will, and then like it merged back to it, right, and then converted. Then you also had a literal reverse split, right, which changed the pricing values. We also, before that, had the ape inclusion, and there were other things, but there wasn't a whole lot of dilution because it wasn't being voted through at that time. And so, looking at that, when we dropped in November and then again later, I was kind of started thinking about why this was such a massive move. And I had remembered that the combo chart that I had, and the combo chart was designed to measure essentially like by way of, and there's not really a better way to do this because this almost represents where ape was at the time, right here now. But the combo chart represented essentially like a mathematical merging. It was a 9-to-5 ratio roughly based on it was more specific, but it was based on the share count versus the price of ape and AMC. And that combo chart ended its valuation. And I had a picture of it. I'm not going to pull it up right now, but it ended its valuation at $2.40, which is pretty fascinating because we came down to $2.39 right after this. And I had speculated at the time that it really looked like an S-curve. It looked like the combo chart was getting ready to drop, unfortunately. And if it dropped, it could drop really, really low. Now, all that being said, once this happened and we got to about January, I stopped looking at that so much and I just kind of started looking at the waves. And it wasn't until December of 2024 because they released a bunch of documentation about that particular offering, and I found it very perplexing. There were some numbers that were presented that just didn't make sense to me, and I started going backwards and looking at it. Anyways, I came up with this 226% shift value, and then later determined that was probably more evident of a ranged valuation. As I started looking back, I found that particular 226 deviation was representative of like the up and down moves, right, that AMC was making basically at the time, which is pretty fascinating. And then later I was like, yeah, it still works. It still worked back here, which was, again, really interesting, I think. And I found that it could be that it's not so much a shift value where like the valuations literally changed, although it's possible it's still the case. More so this could just be like a standard deviation on a macro lens, on a big picture lens. And perhaps I'm using essentially like a manual version of a Bollinger Band. But still, I've been using those valuation shifts quite a bit. And I really wanted to get to the bottom of maybe like the whole, right? Why is it that early on, Booksy, you said that you thought this was going to go to like back to like 70 or 80 or something, right? And now you're saying, well, I don't think it's going to do that. Well, a lot of it has to do with exactly what I've drawn on the screen right here, which is that you have like a bit of a problem. I'm going to hide this for just a second. You have a bit of a problem here where this did drop down really, really far. And it did something maybe that in my mind was like not quite the same as what I would have expected for something like this. Normally, if you saw that drop ledge, like we look at it over here, my expectation is like you're going to come back to that drop ledge, and if you break out, it should have a move, and this is what typically it measures as, that's about the same as the first. So what that means is that if you were to look at this, there's two ways of understanding it. One would be that, yeah, this will eventually come back because this is a wave, right? This is a wave up back to the top. Now you can see right now, if this were to go back to $100 a share, we'd have to leave from like basically $4.50 or $5, right, to get there. We'd have to build that support first. You can also see that based on the movement, this is quite far. You know, the original build out here, I can just do a 1-to-1 real quickly. We're already beyond that scope. There's just no way to get there, right? And there have to be a bigger move. Well, maybe you got this line drawn wrong. Yeah, that's something else I've debated over time. You know, maybe this is lower and it's meant to get up there, you know, da-da-da-da-da. There's all kinds of things that you could kind of speculate about it. But once the shift entered the picture, I kind of lost track of like what would that possibly look like, you know? And the more I started looking at it, the more I started thinking like they probably shifted everything down for a different reason. And it is based on valuation. And I don't think that it's necessary to go back up again in order to achieve kind of the same valuation goals. So there's a lot that goes into that. I'm not going to be able to detail it all. That'd be a forever long video. That this represents the shift value, and that we shouldn't be looking for anything more than about $19.60. So 1960 has come up quite a bit. And the more I've studied it, the more I've looked at it, the more I'm like, yeah, that's about right. So this shift value is actually creating like a new normal, right? Because this area right here, when there was the ape came back in, and then there was a valuation shift, of course, with the reverse split, ultimately what it did is it just shifted down to perhaps what you would say are equivalent levels relative to the previous price target. Now, that being said, this is not universally accepted. I've heard people say things like this is pennies compared to the original price. I get where that's coming from. I do, because if you do like a literal translation here to here percentage-wise, these are like super low. I'm not doing that. So instead, when I do the conversion, I'm looking back at 2.26%, which is actually here. And so this is representative of, I think, what the quote-unquote price would be in reverse relative to the past. So instead of saying, well, this 235 relates to 10 as the original, you know, relates to this, that kind of thing, you're going to get really low numbers if you just do a direct ratio. I'm saying, no, you should do this ratio from here to here and then do the conversion. That's a little strange. I get it. Again, I've done this elsewhere. I'm not going to go into the bigger detail about it right now. I've already spent like 2 or 3 minutes talking about it. I don't want to keep going on that. But suffice to say, again, that's roughly the comparison I'm using. What this does is it changes the dynamics of what's possible here. Because now, when you take that movement into consideration, no, it doesn't go maybe as far as you would hope that it would go, but this certainly seems doable, right? This isn't like impossible. And in fact, if it did drop even lower, you would say, oh, it's still possible, you know? You can go down to like 150 or 170, it could still get up to there. It's not going to hit 224 though, or 124 though, as was maybe previously expected. So if you have this wave formation, and again, I can't stress how, like, even though this is, I think, correct, there's still things that are speculative here, right? Like, we have to sort of just take it for granted that this is correct. And we don't know for a fact it's going to be a perfect wave. But if it was, and that was the breakdown, right? And there's not a halfway point further out. This again pushes you to that February, March 2026. This is where it came from. Okay. And I look at that and I'm like, sure, that makes sense. That's an even wave, measure wise, all that jazz. But if the shift is to be believed, and I think it is, then instead of looking at this as, oh, it's going to move the same distance, you're really looking at it as, again, like we're moving from whatever bottom we have to whatever top is possible. And that would largely depend on time. The longer it takes, I suppose, the higher it could go. And that's just assuming that it just gets back to the drop ledge, right? That reaction. The plot is going to thicken quite a bit, though, because the more that I started looking at this and considering what was possible here, the more I started to think about these variations, right? Now, there's a one that you can do that's a visual reflection. You can see this looks too low, but this is actually a 26% drop. And so the other one is like I think it's like 1.4 or something like that. It's really weird. It's a weird number, or it's like 0.4 something. I did an actual ratio for it. I have that on the other chart. That one's great for looking at it like a Bollinger Band. But this is specifically just using the kind of the inverted shift, right? The 26% instead of the 226, which I know is not, you guys are like, that's not one-to-one. But one thing that I found that was really, really interesting was that if you take this and you use the bottom, and you can see where this goes back to. This is really fascinating because this actually goes back to the 290 region, right? Remember when it was like 292? Yeah, that's what I'm saying, like valuation shift wise. This treats it like it's the second bottom. And what's really interesting about it is when I go back and I look at it this way, and it has to be kind of in the right spot. I have to make sure it's in the right spot right here. This is endlessly fascinating. It's a really just kind of a cool way to look at it. But you can see that this actually still matches that rise. And the more I studied it, the more I was like, it's possible that this particular reaction here in October was really like checking a line as well, or like resetting a line. And sure enough, if you pull it down, it matches quite neatly with the second bottom in March. And it still matches some of the others, right? It's not perfect. In addition to that, you could also kind of take this into consideration and like anchor it on these two right here, right? Which is the August low and on like the 29th or whatever. And then the two tops that followed in October, November. That also matches quite neatly with this marker. It's very, very, very close. Close enough that I think it's probably right, all right? So when I look at it, I'm like, yeah, that makes sense. But if you connect these things, it dynamically changes the chart. And I've done this a few times, again, in other videos. But one of the things that really stood out to me was it actually appears very, very similar to this area right here when you do it this particular way. Because instead of this being this massive, weird drop that's super huge, right? You can see that this instead is just like a hook on that trend. Very reminiscent of what happened in this region right here with these multiple hooks as they came back up and retested tops and retested the floors. This ultimately, again, was where we came back to. And this goes to 2000 and way back, 2017. And this was, remember, this was the breakdown in the LSPY, and very, very similar. This is a big breakdown, LSPY kind of cattier moment. When you do it this way, though, it connects everything as if it's happening underneath, and this is the critical part, right underneath the hole. So when I think about like why shift it where they did, this actually makes the most sense to me, because instead of kind of manipulating the price action or whatever in this region, you just skip over it and you're now just using as if this is like, a valuation shift to just kind of drive you back through the bottom. Now, fundamentally changes a lot of the interpretation of the chart, but one of the things that's very helpful is that it builds this setup to be quite one-to-one. I mean, it does have a significant possibility of being nearly one-to-one on the drive down and then this particular drive down. So And then the interaction here, right, you can see with the moving average is quite cleverly the same, which is kind of masked, and we talked about this as a iteration. So surely, bottom to bottom, they look pretty similar, and they do. Anyways, I'm going really long here. So I took this into consideration. I started looking at, again, like, all right, well, this is a bigger shift than the 226, but it's it kind of makes a little bit more sense of the whole picture, and to some degree. Now here's the kicker, because it's like, well, all right, Booksy. So let's say, for example, let's say I just believed you. Let's say I didn't have any other questions about it. I just thought you were right. All right. Wouldn't that mean that this is all in like a straight line and it's not really breaking out? Well, kind of. And that complicates some things, because obviously if you just draw this line down, you would see that, yeah, I mean, that's pretty decent. I mean, you could convince somebody that that's correct, because you can tell like that shift value is indeed where we are hitting resistance, beyond a shadow of a doubt, right? And this, of course, is then shifted as well to the bottom, and you can see that was very close to, not perfectly, but it was pretty close to like the original, creek as it established over here. So maybe it's, again, just an inherited trend, and I think that's likely. Going to like the bottom, you can see it's closely related to where this creek jump was. There's all kinds of fun stuff you can do with that. But again, the bigger picture being like, well, where does it go to in the end? Because right now you've dropped that level so far down that it's hard for me to think that it's going to go very far. Well, again, you take this in reverse and you're like, oh, it's super low, right? It goes like $1 or something, right? Yeah, it's possible. But there's more to it than that. So I went through, and I'm going to show you guys. This is actually going to be the fastest part of the video, probably. I always say that, but I'm not really sure. So I went through and I just looked at first like channels, right? Now this is kind of interesting, because you might say, well, that doesn't look like the channel you just made. I know, but hear me out, because what I did is I went to the shifted value, and I looked at the top here, which was the all-time high top. And I looked at the top here. I'm ignoring outside trading hours. I know it could change the chart. I'm aware of that. But I'm going to ignore it for the purposes of this, because I did. And I looked at where that top was, and then ultimately I was like, there's a pretty clear middle here. You can see like top, bottom. You can see top, bottom, top, bottom, top, bottom. There's not really a lot of controversy there. It's all there, right? And the bottom, suspiciously perhaps, is not, it's not too unusual, but it is right where that, reverse split happens. They took it right there. But then the rest of it, this is kind of interesting, because the rest of it actually fits in the same box. So it's the same width, again, top to bottom. Yeah, there's a little extra here and there's a little extra here. I'm aware of that. I would consider it like a liquidity test, high and low, kind of checking. But again, 1, 2, 1, 2. You're really moving through these motions quite neatly. So as I started looking at it, I was like, all right, well, let me just take this thing. So this is one I started with. And I was like, that's pretty good. And I like what's going on here. Again, it interacts really, really strongly with that creek that we had from like midsummer last year through the fall. And I think that particular region is very, very, very important to the overall picture here. There's a number of reasons why. One thing that was curious to me was that it hasn't actually broken into the next zone. And just like the other creeks that we've observed, and there's a lot of them, this is one that we just did it like a minute ago. This is one that's been ongoing for quite some time. Curiously, even if you ignore these channels, like let's say you didn't think that the channels were necessarily the most accurate, but I think they are, but I'm saying even if you ignored it, you can see the wave. This is really a wave cross from like really early on. And now with the shifted value, it matches the trajectory that was built in the February to May 2021 region, and matches a lot of these tops that were rejected off of. It's quite interesting, right? So you can see how that carries through. So in either case, it doesn't really matter which one you use. They're basically in the same zone anyways. And that's been the theme for quite a while now. Is like most of your breakouts are going to be right here above 320, same area that we broke out in 2024's May move. So, and you can see that if it did do that, it would be above the, this is the 180 SMA. So on the 4 hours. So you can see it'd be above there. I think the 50 daily moving average is also similar. I'd have to double check, but I think it's like right here. So that would be a creek jump for sure. No doubt about it, right? And if it's above 246, which we'll kind of get to in a minute, you can see that that whole area right here would be a very, very, very strong move. So you need to see it like kind of push up. Ideally, this happens before, like it makes that test before, but if it didn't for some reason, it could come back down again, I guess. That's not a big deal. You need to see it make a higher high and kind of reverse this downward motion by pushing higher than that previous top that was at like 317 or something. But so maybe ideally it does this and then it pushes that top and then it goes again or something like that. That's your breakout. What's curious, of course, is that this puts you back in, perhaps this good reason for this that we're stopping here, because this puts you back in the higher channel. Once you're back in the higher channel, now it's debatable because you could say, well, sometimes it just kind of takes off when it's bouncing, but why wouldn't it just sort of chill out here and go sideways? Well, I'm going to say that not likely going to do that unless it's going sideways low, because the only situation where I could see this maybe doing that is if this needs to drop low to like 178 or 180 and then it comes back up again, right? And it kind of chops here instead. That seems doable to me because this would be trading like a new region. It doesn't really make any sense in my mind, aside from just kind of being bored and not having anything else to do or anywhere else to go. There's really almost no reason, aside from just a secondary accumulation here after a shakeout, there's almost no reason to trade this zone. This is the highest traded zone. At this point, we spent more time here around like this 290 to 3 than we did around 5. And that was quite a long period of time. So it really doesn't make a lot of sense, given that you've checked high, you've checked low. To me, it doesn't make a lot of sense to waste a lot of time. So I would imagine this would be pretty fast if it did happen above, and it wouldn't just kind of meander. So lest you think like, oh, it comes back up and it's going to come across. Well, I mean, it's not impossible. Maybe if this was like another, gosh, you'd be talking about like a third, UT before the real spring or something, or before a drop. I don't know. You'd have to have another argument for that. But it's like, at some point, it's like, you're just doing the same thing you already did, right? So why are we doing it again? I don't know. That to me would be a little odd, just because this area is so traded. I still would say, yeah, it makes sense if it's going to reject, and this is what some people have said, and I agree, that it'd be around this 360 area. If it's going to reject again and really go hard down, that'd probably be the only area that I'd say is a problem zone for the same reason, okay? But on the whole, I would say that once it hits this zone and kind of builds out, really above 250 here and going into the 270s to 3s, you should have a fairly good chance of having a pretty good straight shot. And you can see that the middle, which is about 4, I think it's actually like 377 more precisely. That middle intersects our middle currently going into December 10th, which is this really pivotal moment. So certainly, that could be a danger zone. It could be a place to reject right here, especially going into the 10th with the vote and then also with rate cuts. But there's very little reason to suspect that after that it would stop, because again, the top of this range, and I've made this case before, the top of this range really goes back to like this 570 area at highest, and at lowest you could even argue that maybe it's like 5, because this is chopping like right there at the top, right? That's the liquidity center. But I would say like that 580 zone, 585, and look at where that is. We can say all day that, that's just a coincidence. It's not going to get there. But let me tell you, man, I don't think that the market operates that way. I'm pretty sure it doesn't operate on coincidence. I think it operates on manipulated price targets. And I think that when they set up stuff like this, the triangulations will make sense. And so just like before, we're talking about that wave function, up, down, up again. You could look back and suggest, well, where do I measure from? Do I measure from where it came off of here or the bottom? I'm not going to say it doesn't matter, but I will say that, looking back, we've had multiple middles, if you will, right? There's been different opportunities. We've talked about it. Most of them were right around here in February. I think I went from February 6th to February 24th, which is over here. I think all of those are possible, and I think it's difficult to nail down. For GameStop, I've largely favored this region right here, which is the 24th. For GME, it just made more sense right here for other reasons. This is like a really important walk down. And this guy, by the way, triangulated, does get you up to potentially like these $40 areas. If you double that, you can see where that would go to like the near 80s. If it does a flipperoo, that's also triangulating where that, I don't even have it on the chart right now, but if you go from the highest peak to this peak, it intersects that region right here. So there's a lot of good reason to come up there. And of course, it's above the top of the more classic range. Looking back at where it hit in June, that's kind of the peak zone. And triangulation-wise, it's a really good spot, right? If it does break out. Again, where's the problem zone? Well, you can see it. I mean, if you come up above this creek and then drop back down, just like here on AMC, if you come up high here and attempt to make that push to 350 and then drop back through the creek, and you could be even a little lower than that even. It could be like a really weak up thrust to like 290 or something. That's a problem. You could end up coming right back down, and certainly that's a possibility. But on the whole, where does this go? This goes back to the previous top. So you can see the parity, like you can see the similarity there. It's not even close. If this manages to do this breakout, which is a creek jump, you might say it's even like a, maybe you're looking at it, you're saying, well, I think this is a triangle, right? 1, 2, 3, 4, 5 or something, or starting here, 1, 2, 3, 4. I don't care, right? I look at it as it's a strength test for a number of reasons. If it holds the support here, I think it could just go. And it may be that, yeah, it needs to take a breather. It may not do this all in one go. It could take a breather and come back and fill the gap. But that's basically coming back to a floor that it's taken off from before. I don't see that as a problem. That backup, if that's what happens, it's not a big deal. It's more about if it dumps back through and starts losing other supports, then we could have an issue. But yeah, sure, this is totally possible. This would be a bit on the nose, I suppose. But again, where does it go? Well, it goes back to the highs from June, right? That's where the creek breakout is. That's where this trajectory is on the wave across and back up again. It's a little different for GameStop in the way that it built out, but it's essentially one-to-one with what we saw back in the smaller build out, right, from November and going up. Again, iterating small, iterating large, and then you can see that wave back up. If it doubles up, which is similar to what happened here, even though it went way farther than that, if it doubles up even, that could be sending it pretty far. And if it just gets to where the intersection is and it rejects, that's still high. So even if you were bearish on this, I think there's a decent chance that you would consider this as a possibility. Even if you were like, oh, I think somehow this is really bearish, or you just say, oh, I think these are weaknesses and it's going to do a UT or something, you'd be looking at 33 up to like 43. And I think the same applies for AMC. Even if you were kind of bearish on this, you'd probably be looking at that 350 area, maybe even as high as the 520 gap, right? But I'm going to say that for now, that again, there's a lot of similarity here because you can see the triangulation going into the end of December. This basically goes to the 19th. And then you can see right there, like, sure, I guess it's possible it doesn't run until after then, like Monday or something. But that's where that triangulation is. It's pretty much a straight line. Again, I don't think you necessarily have to hit these points at those times, but it is quite interesting that this is indeed where the range is built, right? And perhaps even more so than that, and I'm going to keep going on the big picture in a second. I mean, we're almost pushing an hour now. But perhaps even more so than that is like doubling this value gets you to like this 1450s area, which goes back to the the gap zone. And I think that's extremely, extremely important. This is the first gap that we made in April 2020. You can see the bottom top motion right here. So if this shift value is to be believed, right, then ultimately like that $14 region, which I said back here when we ran that I thought it would hit a little above 14, that $14 region should be golden. It should be like where we really ultimately want to go back to, because again, it'd be like the equivalent to some degree of us coming back up and retesting all of this drop. And you're like, well, that's kind of low, right? It is, but look at where that puts you in terms of like the macro downtrends. It actually would be breaking out. So interestingly, this point of interest right here, this 593, which came from way back in December 2023. Now again, December 2023 to December 2025, a 2-year move. If it goes back to that marker and it can break that marker, and it's a big if, but if it breaks that marker right there, again, we have it lined up in the range. If that breaks the marker, that's an SOS. You're probably going to have a pretty decent extension here, right? You might have a backup to the creek. Maybe you need to back up to the halfway point. That's what happened back here. Certainly not impossible. Show some support. This is starting to look a lot like what we got in 2021, right? And even more so, you could say, well, I think it's going to go way up here. And da 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 da. I'm just being very like low key about it, right? This kind of blew my mind because as I started looking at it, I was like, all of that's good and well. And maybe if you're transitioning from one zone to the next, this doesn't look particularly powerful to you. But the more I studied it, the more I was like, oh, well, maybe that just makes a lot of sense. Because going back to like that top of the gap theory where this is actually the shifted value, look at where that 1960s, this is February 2026, look at where that hits the mark, So the build out here, although it is still very bullish, this is an extremely bullish outlook. The build out here is actually quite simple. It's an SOS, it's a spring with an SOS, and then it marks up. It goes to the next range. You trade predominantly from 6 to maybe at most like 6 to 8, 10 or something like that. Again, this is the least traded region. If you look at the chart, this is probably the least traded region in the overall picture. And again, thinking that you could probably dip back through 5s a little bit, that makes sense. It's just the top of the range and then push up again. So from a liquidity standpoint, it makes sense. From a trajectory standpoint, a triangulation standpoint, these levels are right where they need to be if you wanted to make that move at this particular time. It's not impossible that these are pivots. So you could always suggest like, well, maybe those are low points. It's going to be low down here in those regions and then push up later. Not going to argue with that. But I will say that it's not impossible is what I'm trying to say. That the way this sets up from 246 to like the 585 up to like $14, all of that is extremely clean. All of it makes sense in light of what we may or may not see. We don't know for sure what we may see on GME. Now, some people are going to be saying like, well, GME is not going to move that far, right? Let me just say this. Remember in 2021, GameStop moved all the way up to the top. So by comparison, during this move, GameStop was all the way up to the top. In the June, and then there's more chop here, I get that. But I'm just doing a quick illustration. In the June move, GameStop does not move back to all-time highs. It does have a decent move, and there's multiple up thrusts here, right? But it doesn't ultimately move back to all-time highs. So by comparison, if we were doing something very similar here, we probably would suggest, and I'm not going to say this is for sure, but we might even suggest that, frankly, going into December into January here, you could have a pretty huge move on GameStop, but then it doesn't actually come back up again on a secondary move. It's a lot more compressed, and this is a lot smaller, right? But you've now moved from middle right here to low, back through the middle, right, which we passed through before, and then ultimately that's a breakout right there, and then you get the markup, and it's a double up, and it puts you right back to where you want to be on the wave formation. Well, speaking of wave formations, I thought you had another chart that had like a huge wave formation, Booksy. Then, yeah, it's right here. This is kind of a messier chart, but it's there. And this suggests that maybe you're hitting like a peak point pretty soon. And you can see that the motions here, like the positions of those levels, yeah, I've got it positioned kind of lower, I suppose. But like, this is just me like looking at stuff, right? Just describing what I'm seeing. And I'm not really sure exactly, but look at where that level is. Again, that's like $6. So you take that $6 mark, you just wrap around it for a second. You basically do the same thing that we just described, but on the other chart. And you can see that motion here, right, on this wave. And you can see how it pushes up pretty high. You see the motion here on the wave. That's also the middle. And this is a more of a macro outlook on some potential. Now, granted, you might say, well, that's too low. Shouldn't this be going to like 14, 15 or something and then dropping back down? It's not impossible, right, that it hits something like 14 first, and we can get into more of that in a minute if we want to. I probably won't get to it, so I'm about an hour into this video. But this is ultimately like a really simple like double stage build out, much the same, and then it would break down and come back down with a maximum value here of like 39, okay, that most of you probably remember if you've been following for a while. So this particular guy, when I look back on it, and I'm considering like all the things that we've talked about, I'm like, this is not that unreasonable. And I still think that there's a good chance that we're going to see that wave back to the upside. But what about, so you've got this idea like, all right, it's transitioned down into a lower channel, yada, yada, yada. What about, and now it could be building out towards these others. It looks pretty good. We just looked at that. What about the wave? Because the wave doesn't seem to match, doesn't seem to be the same thing. Well, for this, I decided to do something a little bit different than the other wave. So the other wave is based on the original opening price way back here through this bottom. So there's two different setups, right? And then this bottom, this bottom. So that's a little different. Now, if I take this, I don't even think it matches. I could double check. I don't think it matches. Yeah. Anyways, this gives you that more of that evidence that, again, like if this were its own channel, it doesn't really match the other one I drew on the other chart, but certainly like seems possible that here sometime, if you're going up, this could match up to something similar and hit you like $24 out in April or something like that. It's not that different from the other one, it's pretty similar. And so I think there's a good chance that we're talking about comparable things. The reason that I did it this way was, again, using what I was kind of using on the other chart was this particular line right here. And then also using what I see as sort of like the midpoint, right? Which is when it drops through this particular zone. So again, this is kind of hard to show without all the stuff, but it will start to get kind of noisy. So what I was looking at specifically was like here to here. So I know that there's an extended trading hours kind of move up here, and I know that this goes a little below. I get that. Maybe again, that's the actual window, but I'm specifically looking at this point to here. When does it catch the bottom? And I looked at that and I said, all right, where is the middle? Okay. And as I started like going through that and studying it, I was like, all right, the middle is like right here. And the only one that makes very much sense is kind of the opening value after the split. That particular value around the $16 area does represent a pretty strong middle between the two channels, as you can see. This is the red line that I've got in between them. So what I did then is I said, all right, let's pretend this is like one big channel. So I don't know if you can see it that way, but what you would do is basically suggest that this is your upward motion, right? So you're starting in the channel here. You've entered into the channel. This is the upward motion. And then this is your downward motion. You're heading to the bottom of the channel, right? And then you're going to do another upward motion again. Granted, we don't know exactly where it lands, et cetera, et cetera, et cetera. But suffice to say, it should measure out quite neatly. I didn't do that on purpose. That was kind of cool, but I didn't do it on purpose. I was just estimating between these 2 points. Like this should be roughly where the middle is. like here to here. So I was purely just kind of looking at it and eyeballing where I thought the middle was. And it does seem to have some touch points, but that's essentially where that middle is, right? So if this is its own wave, you would have this push up, down, and then up again. So this would be kind of like a double tap and a double tap. So double tap up, double tap down. You're probably like, well, it's not going all the way down to 50 cents, so it's not going to happen. That's probably not the best way to look at this, but if you want to look at it that way, I guess you can. I'm just suggesting, again, like if it breaks here, where does it go? That's the middle right here. And that's $5.20, which should sound very familiar because that's the gap zone that they left when we dropped. So again, do you believe in coincidence, or do we think that that's probably like a fixed point on this chart that's being used as a triangulation zone? And I would say that it's probably a fixed point on the chart being used as a triangulation zone. Curiously, this is February 2016. Now you might say, or excuse me, February 2026, February 16th, 2026. So what I did for that is I went back and looked at the touch point here. It actually touches on like March 9th or something, and I went through the middle and I just measured out like a 50-50. And then I messed with the curve until I got it to where it needed to be in terms of like proportion, making sure it's hitting like this center and then this center, so it's hitting the tangents correctly. So this is a very low wave, right? Very low, very like uninteresting, kind of bearish looking wave, right? Like, oh, it rejects here and then it goes down. It could be somebody's thesis. It could be that it never really gets that high. It kind of stays here and then eventually goes up and then comes back down. That is actually quite accurate if you think about what we were talking about earlier with that bigger picture. I'm going to mess it up again, but I'm just going to do it really quickly. Of this kind of coming back through, right, and like failing to jump over this particular creek. That is exactly what we would be seeing here, right, on this walk down. So it's not unheard of. It's certainly not out of the realm of possibility that it just doesn't go back above 520 again. I think the fact that that intersection is there is more about the importance of it, less about basically making a prediction. You can make a prediction that could be right or wrong, but the description of it and why it's important, I think it's extremely significant that it is where it is. It's also interesting because although you might say, well, that's not really very high, and you said just a minute ago you thought in February it could be up, pushing some numbers. Listen, the thing is like when this goes back, right? When this goes back through that, it doesn't actually stop there. If you look at this in reverse, we're traveling backwards right on the wave. If this were to break out, you might expect it to go back to the pink marker. And ultimately, if you look at where this is, I can't tell you exactly where that is. I'd have to look. That's roughly where the motion is. I think I got it about right there. That's roughly where that motion is. It gets through here early. So if you were to look at this as like an inversion, you wouldn't say that that's where it stops, although it's possible. In a bearish setup, that's probably where it stops. That's what I was saying earlier. It could hit 350, it could hit 5. But in a more bullish example, you can see right there the interaction on the mark. You would come above here, and then you would actually come back down. And this is essentially exactly what I drew before, which is a push up here that then comes back. It could go decently high in the short term. You could be talking about 7s. You could be talking about going way, way up. But ultimately, it goes decently high in the short term, and then it consolidates right here going into February. Again, is it possible that's still distributive? It's possible. But my bigger picture point on this was just to say, like, this is basically the exact same thing that I just drew on the other chart. So it's kind of interesting because while there is a bear thesis kind of built into this behind the scenes, like there's an option there to just not go. When you draw the bullish thesis as it's presented, in inversion, this actually looks exactly like what we drew earlier, which is quite interesting. And then, of course, we said maybe a second move in February. That's the same spot. You've got that 520 zone. That could be perceived as your top, right, on the liquidity. It's also the same exact spot. On the one hand, as a bear, you'd say, hey, if we hit below that and reject, that's really bad. It's like another version of something like this that happened before, right? And it's just going to crap out and go down. But on the other hand, you could look at it and say, no, if you land on top of that after consolidating here, that's just an SOS for this range. And ultimately, you're also breaking out, much like we did here, right? Although you're on a different trend, you're breaking out of this channel and moving to the next. And that presents you with an opportunity to move to, you got it, the 1960 zone. And so when I look at this, you may see a little bit of chaos, but I see like a lot of really sharp numbers. And these are numbers that I've had on my chart for quite a while. But to me, that's like, yeah, that's totally possible. Well, that's great, but what about GameStop? Because if this is going up that high, GameStop's got to go way higher. Yeah, potentially. We have a similar situation because if you look back at this and you see where this zone is, surely like if it went 50-50 around it, it's pretty easy to do the math. You'd say it's like $85. Well, right now they're pretty close. I mean, you can see $2.32, 23.08. I mean, they're almost 10 to 1. So naturally, if this were to go to 850, or excuse me, to 85, this could be hit into 850. That to me doesn't look wrong, as an initial move. But then when you say, well, I think this is going to go up again and it could hit this 1960, that means that's 190. Well, I would say this, we don't know the ratio is going to stay the same the whole time. But I will say that when you look at the big picture on GameStop, there's a lot going on here. But one of the things I would encourage you to do is just kind of look at like these parallel structures. Look, it may not be that reasonable at the first glance to say that it goes that high. I get it. I do. But it wasn't reasonable back here either. And if you go back and you look at, again, the movement here, and you consider the possibility that this goes quite high, I don't think that suggesting it goes to like 190 is really even that big of a deal. If you look at where 190 is here, and then you consider like a second move in February that doesn't go as high, maybe it only goes up to 160 or something. I mean, this is exactly what a 1-to-1 would look like, and it's not that big of a deal. Like in terms of the channels, it's just not. And then if you have a long-term sell-off like we did over here, that's much the same, you can start kind of parsing it out. But it's smaller perhaps. This goes back down to like the 40s, over time easily. I mean, this guy ultimately came back and they both came around the $26 mark. So that's certainly a possibility that it walks its way back out. I don't want to go there. That's too far in the future. My point is like, look, I get where there might be some people saying like, that's never going to happen. It's never going to go that high. But these levels are they're really not that high. Like they make perfect sense. This is a double top. If it went above it, this would make sense to come back and check it. Maybe have a secondary move up, consolidate, and then start working your way back down towards these other levels again, right? And over time, yada, yada, yada. You got to basically a copy paste sell off of both of these essentially. And that's not with any kind of a markup. That's just me saying, hey, it goes up and then it comes back down, right? Wave, 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 wave. Pretty straightforward. This is the same setup, basically, is what I'm trying to say. Like, it's not impossible, and I've said it before, it's certainly not impossible this goes higher. I don't think that 1960 has to be like this perfect top. But if it was the top, I probably wouldn't worry too much about it. I think this level from 19, maybe up to like the 20s and 30s right here, it makes sense to me because these are previous zones that we've been in before. It makes sense to me because this is now a move that's ultimately, if you just kind of look at it big picture, it's just a gigantic hook. I mean, it's hard to see that. I'll try to bold it for a second. But it's basically just like a humongous walk down, right? And this is like the middle zone. This is where you have resistances all now because this is like the center. And unless you come back above this area and this triangulation here and this area, you're not going anywhere. I mean, I just don't see it. So it totally makes sense to me to have another long form now sell off, and I'm not going to draw it out, but it would make perfect sense for me that this would potentially come all the way back down again in the future and just kind of sell back down. It's like a really small version of, by comparison, a small version of what happened back here. And then on the bigger picture, you could see this as either a weakness that's going to break down later, or it's a spring and it's going to come back and do a really long form, kind of a backup to like this creek, for example, here. And it's going to come down to like 3s again, or 315 again or something. And then maybe it has a chance later on to break out. I don't know. I'm not there yet, and I don't really care about that right now. But I do think this makes sense to me. And I do think that from a wave standpoint, there's really it's not that complicated. And then when you include the shift in that, it actually adds quite a bit, in my opinion, it adds quite a bit of potential credibility to that move. So all of that being said, I've done a lot of chatting here, and we've gone about an hour. And I hope you've somewhat enjoyed it. I'm known for doing long videos, and short form's not my thing. But this is not as long as maybe some of the streams. When I look at the horizontals, I marked off a lot, and I think that, again, it may seem a little bit overwhelming at first, but I do want to point out that some of these guys, like this one up here around 2240 in the 1960s, these markers are basically from like January. They're intersecting this outer trend January to March. They're not intersecting right now, although there are certainly some low pivots that seem to be happening December 10th through the 15th as possibilities. They're not intersecting like they were here, where it's just like straight up. A lot of this looks like a more of a progressive move, but I would say that, that could be an important pivot point. I don't necessarily think that means that's where it hits the top. I think some of the longer standing motions upward make a little bit more sense. This by itself doesn't give you a lot of evidence of anything beyond going back to fill that gap at 520 as a high probability, and I think there's a high probability of that. When we take into consideration some of the other intersections, so this is what I've done here. This is kind of the zone that I've marked off, but I think you go back as early as January. Ultimately, you're looking at March, and you're looking at mid-2026 for some of these potential top markers right here intersecting the outermost downward channel. And that's about all I want to talk about that. And then trajectory outcomes, these also match with some of the verticals, but I would suggest that what matters more here is this is a 1.786 inverse measurement from top to bottom right now. So it's quite an interesting one because it does go slightly above, and it hits the 1320 to 1445 zone, which is right in the pocket of where we were anticipating, earlier. And then in addition, look at this trajectory here from bottom through the peak that we had in December. That also intersects really nicely at that 2250 zone. And I think that's a pretty important one. I don't think it's the only one. I do think that when you look back at this, I find it to be almost excruciatingly like obnoxious, because it's like everything about this is like, yeah, these are definitely the targets in my mind. I'm more curious about like that directional motion right there, more curious about the timing, right, and how long it takes to get there. But all of this kind of suggests, again, is you're talking about January to March, and we talk about that February 2026 zone for a long, long time now. I've lowered targets, I've had higher targets, I've had lower targets, but ultimately, if this is what I think it is, and this is that break motion, right? And you look at the different possibilities of like outcomes, there's a lot of different trajectories. This goes from like where it first re-enters here, goes across these bottoms. This ultimately is like a late 2026, mid to late 2026 kind of move, only back up to like 14. My point in all this is not to suggest that this is absolutely where it's going to hit. I'm not 100% on those dates. It's more about the fact that those are even targets. And I think long term, we've had a lot of people saying like, well, it's not good. You know, they're kind of bringing it back to the beginning. It's not good. It's taking too long. It's bad. Long is not bad. Long is cause and effect. You've spent years down here now. So the idea that this is just willy nilly checking low, that's just baloney. Like it's either gonna hold this drop and it's gonna do some kind of a UT or UTAD, a hook motion, you know, of some kind. Maybe at most it hits like 5. I don't know. That would be pretty dramatic. Or it's just gonna mark down. But those are the distributive options. That's it. The only other option here is not to just crawl back up and keep going sideways. You just don't do that. Ranges aren't like built that way. Once you've established a range, you've checked the top, you've checked the bottom, which by the way, this is what's happening back here. You get a bottom check or you get a top check, you get a bottom check. Once you've done that, your operators are not doing that willy-nilly. Like they're not just going to go check the tops and bottoms for no reason. You're doing that because you're trying to see if there's strength on the top and the bottom. You're trying to see what you're measuring the liquidity temperature basically. And at this point, there's really no reason in my mind to think that it's just going to indefinitely kind of meander. I think that there's a very real endpoint. And I mentioned it back here when we were going to October, like you're kind of squeezing into this corner. It's going to make a move. It's going to move into a spring. It's going to distribute or it's going to go. So what do we conclude from all this, if anything? I think the big picture speaks for itself. When you look at the wave formations and the way this is built out, I don't personally think that one chart is always better than another or something like this. I use all the things together, but one thing that this really sunk into my head, one thing that really kind of clicked with me here was, I guess, the layered approach to using that shift to kind of estimate those movements. And this does represent roughly like a 200% move here, these particular sections. I don't necessarily think, again, that that's out of the realm of possibility. It makes perfect sense here, especially if over 246 to move up to 200% because you're going to hit the top of the range. That makes perfect sense to me. Beyond that, you know, you're talking about humongous moves, but you're also talking about breaking out. I mean, that's the thing. It's like going above there is not insignificant. You're also talking about breaking out of like a massive, I mean, and I'm sorry, this is the same trajectory. I don't know if this is going to matter that much, but it is there. And it does look like it lines up pretty neatly with early March earnings. Again, not sure it matters that much, but it's there. If this ends up being the low and doesn't go down again, of course, that's an if. But ultimately, like what gets me about all this is like the movement here of a big squeeze motion up in mid-December or going into January. All of these things really just kind of clicked into place. And I have not found numbers that, to me anyways, there's not numbers that work better. And, you know, if we're looking at this on the big picture, it totally makes sense that this is probably going to be your stop zone. A lot of people are going to be like, puh, you know, blah. Even now, I've had people that were in our Discord group who were saying like, it's not going to go to 20 again, you know, it's poppycock. And I'm like, no, I don't think so. I think that, you know, in the end, this isn't really that big of a deal. Like it's a big deal on the wave down because you're like talking about a big move up. Obviously, it's a huge opportunity for folks. That's not what I mean. But on the big picture, it's really just a backup to check these levels, which they've been checked a little bit, but we missed some key ones when we just dumped through here. So I don't see it as very controversial. I feel like it's a very subdued price target. And the fact that we're using these wave parameters and coming up with basically all the same exact answers, it's very clean. I don't feel like it's that dramatic. Now for GameStop, same deal. Yeah, like at first glance, this seems like too much. But again, if it's an upthrust after distribution and it's not going to go higher, why not go back up and push again, you know, on the top? why not try to make another effort? You see that back here too with this kind of last minute push. It tries to push back up previous tops. That would put you back over 35. It's not unheard of. It's not controversial. When and if it breaks there, that's where you have some serious fireworks. And again, you might say like, well, it's a bit too, maybe it's a bit too high for my liking. But listen, if it gets above that zone right here, so that actually looks like December 30th. But as far as triangulations go, it's right in that December zone going into January. So like to me, I see it as compatible with everything else that's going on. I don't see it as it's coming out of left field, coming out of nowhere. If it breaks back up and goes back and retests, $48, AMC going back up and retesting 520 or whatever here is absolutely logical. It makes perfect sense to me. And then GameStop breaking above that level at some point and breaking out is like breaking out of the macro creek. And AMC breaking out at that level right here is like breaking out of the macro creek. Like they're exactly the same in that regard. So anyways, that's all I've got for you right now. I think we're in a really good spot. I'm looking at nothing but just simple numbers right now. I've got markers set up, at 3. I had another one earlier that I had it at like 260. I think 260 zone right here is a good one to watch. And then GameStop, same deal. I'm not really looking at this religiously. I'm just kind of watching it. I would say $26 right here, similar zones. And then ultimately like this 30 mark. All of that's really good. All of that's solid. I'm really enjoying just kind of watching it and see what happens. Obviously you got to make the moves that you got to make with your contracts and all that junk, but that's up to you. So appreciate you guys hanging out with me about an hour and a half or so. But I hope you guys have a good one. Maybe I'll edit the video. It won't be so long. And I'll talk to you later.